Yo, what's going on, guys? It's your boy Mac the Trader, and welcome back to another video. In this video, we're going to be talking about an over 8% return on US 500 index market. I'm going to show you guys the entire breakdown from top to bottom, going over my higher time frame confluences and my lower time frame entry. Right? If you're not a part of the YouTube family, feel free to go ahead and subscribe to the YouTube channel and hit that bell notification icon to be updated whenever I upload a new video. If you guys do have any questions, always feel free to put it down in the comments down below, and I will get back to you as soon as possible. With that being said, let's go ahead and hop right into the video. I'll see you guys on the charts. All right, so starting on the higher time frame, okay, using my macro time frame. Now, last week we had a lot of news events to release, right? And I always tell my students, feel free, if there's high impact news on a daily basis, always feel free to just stay out of the market. When you make choices like that, when you decide to stay disciplined within the market, that is going to be more money in your pockets and less losses that you're going to take within the market, right? Now, even though we did have high impact news, we had a ton of beautiful trade setups using my exact index strategy taught within my index course. If you would like to check that out, link is in the description. You guys know the deal. So let's go ahead and go over our higher time frame confluences on US 500. So first, what I like to look for is the sweep of liquidity. We can see that price pushes to the upside here, right? 930 open is right here, this vertical line. We push to the upside and we were seeking liquidity above this swing high here, right? Another question that I get a lot, especially to my new students who have just joined the mentorship program, a lot of them say, hey Mac, you look at swing highs and swing lows very, very different than what I've seen any trader do. And it makes it very, very easy for us to spot these trades and trade them. So what I want you guys to do is, I think I do have a swing high and swing low video. If I do and I find it, I'll post it somewhere within this edit, but feel free to go through the playlist, check it out, and it'll really assist you with understanding how I trade, because there's only one thing that I look for on the macro time frame in order to day trade, and then there's a couple of things I look for on the micro time frame because it's more information. However, you guys can be very, very successful trading the same setup every single day, and my index course teaches you exactly how to do that. So once we see that sweep of liquidity, all right, and price pushes to the upside, I'm not quite sure if we have some type of SMT divergence here, but if we go to the NASDAQ really quickly, I just want to check this out. Now I'm curious, do we have any type of SMT divergence? We don't. So it looks like we don't have any divergence, which is very interesting. Usually whenever we see a reversal on, let's say, US 500 or NASDAQ 100, usually it will look a little different from the opposite pair. So that's really interesting, right? Now, before we go to the lower time frame and look at the exact entry of this trade, let's go ahead and talk about our targets. So we have one target around 5R, I think 5.36, or excuse me, 5.93% return on investment. And then we have our end all be all target right here around 8.34% return on investment. This is a very, very straightforward trade, as you guys can see. And I believe this trade produced the most return out of all of our trades from last week. Here, let's go through them really quickly. 2.89. I mean, we're not going to go too far back, but yeah. So I think, yeah, Friday's trade produced a whopping 8% return on investment using my exact index strategy. So not bad at all. With that being said, let's go ahead and go to the lower time frame. Let me go ahead and break down the exact entry for you guys, what I looked for, what took place, and we're going to go over multiple confluences that I want you guys to look for when you are taking your entries on your own charts. So let's go ahead and head down to the lower time frame, and I'll see you guys there. What's going on, traders? This is your chance to unlock endless possibilities with our unbeatable trading program. Priced at only $53, this deal is just too good to pass up. Come get access to a wide range of features and benefits that will take your trading to the next level. Whether you're looking to improve your profitability, streamline your income, or simply invest your own money, our unbeatable trading program has got you covered. Don't miss out on this incredible opportunity. Sign up today. All right, so now that we're on the lower time frame, this is going to give you guys pretty much all the confluences outside of a couple that I used in order to take this trade, right? Now, all of the confluences are broken down within the index course, and I explain each confluence in depth so you guys have a full understanding on what you're looking for within the market. Now, those students who have had excellent returns and who have passed their funded challenges, we're going to do a giveaway this coming month to all the students that have passed funded challenges. I'm not sure what it's going to be yet, but it probably will deal with cryptocurrency. So feel free to stay tuned if you would like to see which one of my students wins that. All right. So we can see that we have the M15 sweep of liquidity here. This was at M15 swing high where we had resting stops. All right. We can see that price pushed to the upside, right? And then around 11:38. Okay. By the way, we are on the M2 time frame. I usually take my entries on the M5 or the M2. We also had a beautiful M5 setup here, not using as many confluences as we did on the M2 time frame, but it was still nevertheless a really good setup. We may check that out in just a second. On the M2 time frame, we had this nice push to the upside coming off of this swing low here, right? Then we had a sweep of this liquidity here. All right, essentially we had relatively equal highs with this swing high and this swing high on the M2 time frame. Once we swept that liquidity, we had a nice momentum push to the downside where price took out this swing low right here. Now, there are a couple of ways that you can look at market structure shifts, okay? However, this is exactly how I utilize market structure shifts on a daily basis trading US 500. Now, you guys know we did trade currency last week and we produced 20.11%. Now, that's trading CFDs, so we're not necessarily trading contracts like we're doing with the futures market. However, if you would like to be a part of that, all right, this week, every single day, I'm sending a daily update to everyone a part of Trillionaire Mac Trades. All right, if you'd like to join in on the Telegram, join the community, and take advantage of the analysis videos. Wait until price hits the areas that I say. I'm going to show you guys exactly what to look for as it relates to the entry. And we take our entries on the M15. You can go lower if you would like, but I take mine on the M15. And they're pretty straightforward. So last week, 20.11%. We may do like a little video tomorrow showing you guys each trade that I took, the reason behind each trade, and what you guys can do in order to catch the same moves, right? So stay tuned for that. Hit that notification icon. So once we had this move to the downside, all right, taking out this swing low here, all right, price then moved back to the upside with this candle, and it gave us an opportunity for imbalance pricing, right? So we have an imbalance right here, all right? The very next candle was the candle that would have triggered you in if you would have traded this strategy on Friday, right? We can see that we have this nice wick to the upside. All right, so we have imbalance as one of our confluences. All right, our second confluence is going to be premium and discount. We can see that we have 50% right here. All right, I don't pay attention to the 62% or the 79%, not for this, but we can see that, you know, this imbalance is above the 50%. So we are within premium, which is another beautiful confluence that you can use in order to increase the return on your trades. And also, I would tell you guys, be a little picky with your entries, right? Feel free to be a little picky with your trades. Feel free to add extra confluences, because at the end of the day, you're just trying to end up on top more than you lose. So the more confluences you have that makes sense, okay, then, you know, the better your return on investment will be, and the much more consistent you will be at the end of the year as well. We also have an order block right here. So this is our order block range going from this low all the way to this high here. This is the entire range. In order to find a bearish order block, we have to look for a bullish candle. Now, this is the order block of choice. If you have access to my index course and you know why I chose that specific candle, and that is exactly why price trades right into this. Now, if you would have used, you know, let's say the regular rules for an order block, which would be this candle here, as you can see, you wouldn't have been triggered into the trade, right? It's really all about information and what you know. And here at Mac Trading Academy, we're going to teach you all of that. So we have premium and discount, perfect. We have a bearish order block, perfect. We have imbalance, awesome. We have a market structure shift, perfect. All right, we have a sweep of liquidity here, beautiful. All right, this is a very good sell model. All right, now we're going to go ahead and look for, so we took our entry here. All right, stop loss is right here above the swing high, 6.55 handles, not bad at all. First target, like I said, like we saw in the M15 time frame, was here. All right, for about 5.93%. And then second target was right here within this area for about 8.34%. So very decent trade. Now, let's talk about the trade management. A lot of you guys ask me, do I move my stop loss, you know, to break even? How do I manage a trade? The reason why I don't move my stop loss to break even is because the stop loss range is valid until price hits your target. Okay, price can move all the way to the downside, all the way down here, and still push back to the upside and play around within my stop loss range, right? We have a stop loss for a reason, a specific reason, and that should not change. Okay, so what I do is I'll just close whatever I'm risking when I hit some type of liquidity, right? So as we can see, we run into liquidity here. Okay, so once you hit this swing low, which is based on the M15, all right, if you guys remember, this was a swing low based on the M15. Once you tap into this liquidity here, okay, then you can feel free to close whatever you're risking. So just 1R of your trade. All right, that's going to keep you on top more times than not. But I don't move my stop loss, because then you start to run into stuff like this where price will run, then it runs back, you know, runs into your stop loss, things like that. And then now you're out of the trade. Right now, if we're live trading and let's say we're already down 1%, okay, and we want to make sure that we don't expose any more of our capital to the market, then we may do something like this, right? But when you're taking these trades every single day over and over and over again, and you want to be consistent, what I would suggest is that you guys don't move your stop loss. When you hit a profitable area, or when you hit a nice target that are based on your rules, okay, within your trading plan, then you can always feel free to just close 1R of your trade, and you're going to end up on top more times than not, right? And that also allows you to be more consistent and more disciplined with your trading, right? You're doing the same thing over and over and over again, right? So that's just my 2 cents on it. Now, when it comes to Forex, okay, that's a completely different story. But when it comes to futures, our stop loss is there for a reason. All right. So if you guys enjoyed this video, feel free to leave a like on the video. We're going to go ahead and go over the M5 information as well. Okay. So on the M5, we take out the swing low here. Okay. We see that we have a swing low. Price runs through it. And then we can easily find our order block, which is right here. And we can see, you know, based on the M5 time frame, price runs right back into our order block. So even if you did not take this trade on the M2 time frame, you could have still taken this on the M5 and had a very, very similar entry. Okay, it would have been right here. So you would have been risking a little less, and then your return would have been greater, of course. But you know, it is okay if you decided to take your entry on the M2 time frame. Also on the M5, we don't have any type of imbalance within this region here. And you guys know me, I like to see imbalances within the market. So you know, M2 was the choice for me on this specific trade, all right? But the M5 looks good as well. So with that being said, I'm gonna go ahead and wrap it up here. If you guys enjoyed this video, like I said before, feel free to leave a like, and feel free to check out the index course if you want to take your index trading to the next level. I'm gonna give you guys all my secrets, and you can use them in order to be successful and profitable as well. All right, I'll catch you guys on the next one. Peace out, and much love.